Jason Engelman. I'm coming to you from Fort Worth, Texas. I was supposed to be with you guys, and unfortunately, am not going to be able to make it. This is my first Think Realty conference to miss in like the last 5 years. And so it's a real bummer to not be able to hang out with old faces and talk shop with friends. But I do have a good reason. My wife, Tori, she's a country artist, and she's opening tonight for Easton Corbin. It's a really big show, and I want to be there to support her. And so I'm real grateful that Linda said, hey, just go ahead and record this and send it in, and we'll play it during the lunch break. So as you are eating lunch, sponsored by Freaky Fast Home Buyers and Investments, I will try to be as entertaining as I possibly can and try to provide some good insight for you, the real estate investor, whether you're an expert and you've been doing this for many, many years, whether you're fairly new to it, but you've already done a few deals, or maybe you have not done a real estate transaction yet, but you are here because you want to learn, or you are trying to figure out what it's all about. And I want to give some information to you as well. I am just going to kind of hop right in. We do have some slides that we're going to show you, but it's going to be just a real basic informational type of talk for the next 20-30 minutes. I do have our team here at the conference, so we do have a booth. Please make sure to go see Colin and go see Guy. If you have any questions afterwards, you can go talk to them. They'd be glad to tell you more about what we're doing. And again, I really wish I could be there with you, but I know you're in good hands. So make sure to stop by our booth. Just a brief idea of who we are, Freaky Fast, in case if you are not familiar with us. I started the company back in June of 2019, so we have just hit our 5-year mark earlier this summer. And we started buying properties, single-family homes in Columbus, Georgia. And from there, just branched into different markets like Cincinnati, Ohio, Knoxville, Tennessee, Indianapolis, Indiana, Gary, Indiana. We just purchased some properties, 29 properties, earlier this year in Wichita Falls, Texas. And so we are in multiple states, and our whole purpose for Freaky Fast is to create true passive income. I know if you've been to a conference or like this, or maybe you've read a book, or you've seen a webinar or a Facebook ad, you hear passive cash flow, passive investment. And that's something that's kind of beat into us. And so a lot of times we hop into real estate thinking that it's passive, and after many hours that we put into it, whether it's finding deals, rehabbing those deals, working with contractors, trying to sell those properties, so you're working with realtors and title agencies, or maybe you're trying to rent them out, so you're working with property managers, or maybe you're doing your own renting or leasing, and so you're your own property manager, so now you're dealing with tenants and you're taking calls at 3 a.m. because the toilet's overflowing because someone flushed something down the toilet they shouldn't have. And that happens all the time, believe it or not, common sense, but sometimes tenants just don't have it. And so now what you've found is that this truly isn't passive, it's a second job. And the whole idea with Freaky Fast is to create true passive cash flow or passive investment opportunities for you, the investor. What we have done over the last 5 years is purchased over $45 million in assets in those states I mentioned earlier, and primarily have created investment syndications where investors can put the money into a fund, and those funds then go acquire properties, rehab those properties, and do the BRRRR method, where you're buying, rehabbing, you're renting out, refinancing, and then rinsing and repeat. And so that's the main strategy for our fund. And I'll tell you a little bit more about that here in just a little bit. But I want to kind of talk with you just for the moment for the investor. Obviously, 2024 has been a very interesting year. It's been a very difficult year. It's been very challenging. It's been challenging for everybody, whether you're an expert and you've been doing this for 20, 30 years, whether you've been doing it like me for 5 years, so you're an expert, you've done a lot of deals, but you're still fairly new to it. You didn't necessarily start investing in 2008. I was a freshman in college, eating popcorn in my dorm room, so I wasn't doing any investing in 2008. So for me, it's been somewhat of a learning curve as we've gone into what I consider a small recession, what I consider a buyer's market. We are no longer in a seller's market. And so with these different changes that we see in the economic markets, there are consequences, or there are things that happen that we can't control, and so we have to be smart about it. And again, like I said earlier, it hasn't been easy. It's been a challenge, but you just have to persevere and you just have to push through. So let me just take just a few moments and just give some data points. They're points that you probably will hear from other speakers. They're points that maybe you've read. So it's not necessarily like shocking news that you haven't heard before, but it's sometimes just a good reminder why you invest in real estate. You know, I've had a lot of investors say, well, you know, we've got money in the stock market and the stock market is seeing, you know, all-time highs, and we don't necessarily want to pull out of the stock market right now. We want to keep it in there. And I can understand that mentality. The thing about the stock market is it's very volatile. It can come out at the end of the third quarter. Reports of the companies didn't necessarily do well, or maybe there was a decrease in jobs, or whatever type of news that might affect the investor mindset. You could see the stock market go down and go down quickly. We saw that happen just a little over 30 days ago. And some investments were made in Japanese currency that just didn't work out quite as what people planned. And so all of a sudden it created this down day in the market, some of the worst days that we've seen. But then it bounces right back, and so it's up and it's down. Why is real estate better than that? Because real estate is a tangible asset. Real estate is a need. Real estate is something that people have to live and live comfortably. I know there's people that maybe have a tent in their backyard or under a bridge, and so I understand that. But for the most part, people need a roof over their head. And that's what makes real estate a little bit more sustainable, not as volatile. What we're seeing right now is we're seeing the market shift. And it's kind of shifted rather late, I think, than what a lot of people expected. When interest rates started going up in 2022 and 2023, I think people, especially economic experts, were saying, okay, the real estate market's going to crash. I heard that so many times talking to investors, or maybe reading something or listening to the news. And that's what the news does. They like to feed and fuel fear. But to the chagrin of a lot of those investors, it really just didn't happen. And the reason it didn't happen is a few things. So number one, we are still at a major housing deficit. Thanks to 2008, 2009, new construction came to a screeching halt, and that created a deficit. 2020, with the COVID lockdown, did not help the situation. You saw supply chains and things in that matter with materials and permits, and it became very difficult to keep jobs moving. In some cases, some builders even stopped because they're afraid that they might experience 2008 and 9 all over again. So that just added to the deficit. You can look online and see what kind of deficit numbers are out there, and they range anywhere between 4.5 to 5.5 million homes. And so that in itself has kept the housing market fairly stable. A second reason is because we're seeing one of the largest migrations in the history of the United States, with the millennial generation and moving into their first home, whether they just started a family or maybe being in lockdown and COVID in an apartment with roommates or in their parents' basement was just too much for them, and so now they want to get into a bigger home. And so it's created this demand. It's been very difficult, though, for these millennials to buy properties for the next reason that's kept the market fairly stable. And that is 9 out of 10 homes right now, or 9 out of 10 mortgages, are with interest rates less than 3%. So if you have a house and maybe you want to downsize, or maybe you want to upsize and get something a little bit bigger, but you have a house with a mortgage at 3%, you're kind of leery about selling that property and then replacing that mortgage with one at 5.5 or 6.5%. So what you've seen is people wait, and that's caused a little bit of a tightness on the market. And so over the last year and a half, with the fact that we are at a deficit, with the fact that there's still a huge demand, and with the fact that there's not a whole lot on the market, you saw the market stay very stable. Well, that was last year. That was part of this year. Well, let me kind of share with you what we've seen this year. We saw kind of the second quarter kind of pick up. And I was actually pretty excited. I was thinking that the third quarter was going to be very similar. However, the third quarter has been a very rough quarter in the real estate market across the board. I have a friend who owns a title company in South Florida, the Fort Myers area. He told me that business right now is down 60%. 60% from last year. And last year wasn't necessarily a great year. He was saying that in some cases it's even tougher this year than it was in 2009, 2010 because at least back then there were still a lot of cash deals going on. But he's not seen as many deals. Redfin came out with an article a couple weeks ago saying that in August we've seen more real estate transactions fall out of contract than we have in the last 4.5 years. That's crazy, folks. I'm talking to realtors in multiple markets where properties are staying on the market much longer, and we're seeing prices coming down. What we're seeing is a small recession. What we are seeing is a seller's market definitely turning into a buyer's market. Now, what's interesting is I think you'll probably hear other experts say something very similar. But that doesn't necessarily mean that it's doom and gloom. And please don't take it that way from the way I'm presenting it. You may hear some experts disagree with me, and that's totally fine too. You can line up 10 different investors and get 10 different opinions. But here's what I do know, and I'm just going to share a couple slides with you. I talk to investors almost every day, and here is one of the major concerns that investors have, and that is 2024 is an election year. I'm sure you've heard that. I'm sure you've maybe even said that, used that excuse to keep you from pulling the trigger. And what we've learned is that the media likes to make it even, again, they just throw gas on the fire. They make it even that much more, create this panic or this fear. And after a while, I kind of got tired of hearing this excuse. So I just started doing a little bit of research. There was a great article that the Wall Street Journal came out. And the writer did this deep study to see if elections really truly affected the investment portfolio for the investor. And based off the case studies, investors who pulled out or they sat on cash or they waited to after the election to see what would happen before they got back in actually lost more money or lost or saw their portfolio go down than investors who just rode through it. And it didn't matter if the Republicans won, it didn't matter if the Democrats won, they actually made more money. And they did not see a dip in their portfolio, they actually saw an increase in their returns. Except for 1 year, and that was 2008. And honestly, I don't think that has really anything to do with who won the election as much as it did with just the mortgage markets and the housing markets at that time. So what does that mean? That means no matter who gets in, there's still going to be deals. There's still going to be opportunities. And now maybe depending on a certain candidate's policies, whether when it's about capital gains and things like that, there raises concerns. But what's nice about America is there's checks and balances called the House of Representatives and the Senate. And so a lot of times you may see these extreme agendas, these extreme policies that cause a lot of fear in the market that never come to fruition because they never pass through Congress. So what happens is we freak out, we pull the money out of the markets, we pull money out of maybe real estate transactions, and we just sit and we just wait. And what's happening is we're seeing deals come by, and we're just waiting. I know a lot of investors who've put capital in deals that haven't done well, that have not paid out, or maybe they've literally come to a screeching halt. And so that's created a liquidity issue and a tightness on our investment portfolio. And there's understandably concerns of why you need to be careful right now. But with the election, my one advice is just keep investing. And here's the reason why. Scared money does not make money. Now, I know you've probably heard that before, but it's very true. Scared money does not make money. Why? Because scared money is sitting. We know the parable in the Bible, right? Where the master or the employer, so to speak, gives his 3 servants talents. And he gives the one servant 5 talents, the second servant 3 talents, and the third servant 1 talent. And he says, I'm going to go away. When I come back, I want you to report to me. And so he comes back, and the first servant took the 5 talents and turned it into 10. And the second servant turned the 3 talents into 6. But the last servant returned the 1 talent because he had buried the talent because he was afraid of losing. And what did the master say? The master says, you wicked servant. Now it's interesting that, yes, that's a parable that Jesus uses about being smart and being a good steward. But there's so much practical wisdom in that. Scared money does not make money. Now, I think smart money makes money, right? Like you can't just throw away money and not be smart and do your due diligence on deals. But if you've got money sitting, that's a very dangerous thing. What's amazing to me, I was talking to a friend of mine. In fact, you'll hear him speak soon, Jason, with New View and now Inspira. And Jason and I were talking in Dallas. A great name, by the way. And we were talking at Dallas at another conference 2 weeks ago. And he made a statement that he's seen investments in qualified money actually go down over the last 6 to 12 months. And what's surprising about that is money's just sitting there. It's not money that investors can even take out right now, unless if they're over 60, without taking a penalty. And it's sitting. And what's wild to me is the fact that you're losing out on opportunities. And I hope it doesn't come across that I'm rambling, but I want to just share with you one more story. I talked to an investor yesterday, and he said that a apartment syndication deal came across his desk. And the sponsor or the GP of this deal said, this is the best deal I have seen in the last 7 years. And he goes, and I can't get anybody to invest in it. What we're seeing is great deals coming across our desk. I mean, at a constant rate. I mean, every day I've got at least 2 to 3 coming across my desk, sometimes as much as 5. We locked up 25 deals last month to go into our investment fund that we're currently raising capital for. And the tricky part is getting investors to actually invest. And again, it's because of fear. But what's happening is they're missing out on some great deals, waiting for the bottom to drop. And then maybe to invest, or maybe after the election they'll invest. And what's happening is they're losing money by waiting. The other issue that we're seeing is inflation. And again, not a lot of new surprising statements here. We're seeing the cost of living just go through the roof. And when I mean cost of living, I mean like groceries. I saw someone post the other day $9 for eggs. I mean, that's just absolutely absurd. So how do we fight inflation? How do we fight this market? We have got to figure out how to create cash flow. We got to figure out how to take what we do have and invest it to create more. Or eventually we'll run out. Eventually, if we just live off what we have, it will eventually evaporate. And again, this is stuff that you know, but I'm just trying to reiterate it. You know, the greatest football coaches in practice, they run the same play over and over and over and over again because repetition breeds success. And so what you're hearing may be repetition from what you've heard from somebody else today or what you've maybe heard multiple times, but over the course of the last few months or years. But the truth is, you got to keep hearing it, because if you're not careful, there's so much other news. There's so much other noise out there that can distract you, that can cause you to fear. Believe me, I know. I've been doing this for a while now and living it day in and day out. And there's times where it can get a little frightening. But you can't allow your fear to cripple you, because you may just miss out on winning. So what is your level of concern right now? Where are you at in the market? My encouragement is, now's the time to be smart, but now's the time to invest. Now's the time to pick up deals as they come along. Should I keep more money in cash? Now, I personally think that you should have at least 3, if not 6 months in reserves, if you can get to that place. For some, maybe you're just starting out and you're still building up, trying to get away from living from paycheck to paycheck. In some cases, I think it's smart to sit on cash if that cash is set aside to invest. You've seen Warren Buffett just go on a sell frenzy. Well, it's not because he's afraid. It's not because he's going to just sit on that money for the next few years. He's waiting for opportunities to go back in and to buy when people are running out, when people are afraid. That's when he's buying. And so he's creating a liquidity position so that he can act on what the market is creating. So if you're taking money to look at investment opportunities, then that's smart. But if you're just sitting on it, you're making a mistake. I would have enough, like I said, for 3 to 6 months. Maybe if you're running a business and you've got employees and you need to build up your reserves so that your business stays strong and you're not stressing over that, again, that makes sense. But if you're sitting on investment capital, I would not be sitting on it because you're afraid. I would not be sitting on it because you're waiting to see what would happen with the election. If a good deal comes along, then it's a good deal. Be smart about it. Maybe increase your cash conversion cycle. So if normally a house would take 6 months to sell, maybe add another 3 months or 4 months. Add in contingencies so that you can be smart. But again, numbers don't lie. And if you can find a great deal that has a good number, good numbers behind it that support the confidence to invest, pull the trigger. Don't sit on money. I'm going to end on this. I know I've probably been rambling, and it's probably not as exciting when somebody is on a TV screen versus in person live. So I do appreciate you taking the time to watch this video. Here's our asset fund. This is an equity fund that we created last year, and this is just an opportunity for investors. And basically what we've done is we've allowed investors to come in and be a part of buying deals that need rehab and adding value to the property through the rehab and creating an equity position as well as cash flow. This property, or this fund here, is a $10 million fund. Excuse me. And we've raised around $7 million in the fund so far over the last 12 months. And over the last 12 months, it's paid out 11.2% monthly cash flow. We have over 95 properties in the fund currently, and we are looking to raise the next $3 million over the next 3 to 6 months to continue buying. We're actually in the process of getting ready to refinance some properties in this fund and do the Burr method, where we've added value to the properties. Now we're going to use that value to be a down payment, pull out our principal, and repeat the process. And so we're really excited about this fund. I just kind of want to share with you a couple deals as we go through this. So here's one property on the left, 461 West Mimican. It's a property that we are doing in our fund. And it's in downtown Cincinnati, right by the new soccer stadium that their professional team just built. And what it's doing is creating a huge value increase in this neighborhood, a lot of gentrification going on. This property here is a 3-unit property with a commercial space on the bottom with great views of the city. It's about 5 minutes from the casino and 5 minutes from the Bengals and the Red stadiums, and it's literally just half a mile away from the soccer stadium. We're actually in the process of trying to acquire the one next to us, this property as well. So basically we'll have 12 units. The all-in purchase of this property, as well as the other property next to it, is $400,000. We're going to go in and we're going to add another $450 to $650 in value, or in rehab. And what that's going to do is it's going to give us a valuation of a little under $2 million. And just a great deal. It's a little bit longer term type deal because of the rehab that is going to take. It's quite extensive. But again, finding deals that will cash flow, that are going to provide great equity is what it's all about. What you're going to see on the right is some properties that we purchased just a few months ago that are in the fund. We were able to buy them via owner financing. And so we were able just to put a small percentage down and acquire 29 properties. And just with the interest rate at 6.5%, we were able to create a cash on cash of 15.8% with these properties already cash flowing, with the opportunity to even add value to these properties as tenants move out. We can go in, rehab these properties, get new tenants in, increase rents, and so forth. I'm showing these two deals to you because I want you to see that there are great deals out there. The question is, will you take action? Will you put money into the market? Will you invest? Will you allow what's coming across your desk to help further your goals? You say, okay, what do I do? Like I'm here for a reason. Like I'm here because I want to learn. I'm here because I want to network. I'm here because I'm maybe looking to raise money for my own deal. And there's great lenders that Linda and the Think Real team have put out there for you. Go see my friend Alessandra at Flipco, great lending company that does a lot of our deals. There's opportunities out there. So if that's what you're looking for, make sure to go see them. Maybe you're just looking to see what kind of deals you might be able to invest passively. They're out there. Come stop by our table or go see someone else who may have some great opportunities for you to invest. But here's the thing. Don't be afraid. Make sure to pull the trigger. Make sure to be brave. One of my favorite quotes, "Courage is being scared to death, but saddling up anyways," by John Wayne. And it's so very true. But for you to be successful in this type of market, know what your goals are and work your goals and build out a plan and work that plan. And sometimes plans change. Sometimes plans have to evolve because of situations that you don't foresee. But that's okay. Just know why you're doing what you're doing and work that goal and persevere. Push through. When things get tough, don't quit. Believe me, there's times where you want to quit. Don't quit. You have to push through. And you'll see much reward on the other side. I'm Jason Engelman. Thank you so much for listening to me. And I hope some of the information I provided has been beneficial to you and what you're looking to do. Please make sure to stop by our booth, talk to Colin, talk to Guy. We'd love to tell you more about our investment opportunities. We've got deals that we're working right now that we're raising capital for, and we love the opportunity to partner and work with you. You have a wonderful day. God bless.